What's up, guys? Welcome back. Malik here, and today I took four trades on the market, but I'm very upset because I could have taken a clear sell side trade today based off my strategy. The strategy said sell side clearly. I ignored it and kind of was fearful to enter the market today. It was like from 14,980. I was watching it. I'm like, damn, this is gonna reverse, and I'm gonna be able to enter again. It just kept falling for the entire day. So while it was going down, I was able to capture a sell side position, yes, but then I still wasn't able to get that entire move. And I was even able to get in a buy position and exit quickly, but I didn't get that entire move that would have brought me to where I would have successfully passed this challenge and had a fully funded account. But we'll catch it next time for sure, or catch it on another move, because as you can see, the daily candles are so violent that you can get a nice good move out of them if you just get the right direction. We're into this zone right now. Possibly we're gonna break below. That's what I would want. I think I'm already knocked out of my buy position trade already for tomorrow. I have a sell side trade with a stop loss at 14,720. Hopefully I'm not knocked out, but if I get knocked out, it's fine. It's probably like a $20 loss, and then the buy side trade was a $9 loss. So let's see how that trades tomorrow, but let's get into the trades from today. You can see that today was this big red candle. I'll show you what happened. This one I entered quickly in and out because I didn't feel confident about the position, but as you can see, it turned out to be a good position. But because I had entered during the middle of the day, I didn't really like holding this position. I felt like I was assuming too much risk. So when it came up to where I had a loss of about $0, if not $1, I just exited the position. So this one was at 14.8. I closed it at 14,859.42. You'll see it pretty close to there. Like it's almost unseeable unless you zoom it in, for a total loss of 0.69. Let's close this now. I'm gonna use some, let me use some different color horizontal lines so you can more pick it out. Let me use a purple. I'm gonna use a purple. Cool. So let's get rid of these now. The second trade was a sell side trade. It was more into the middle of the day because I didn't enter from last night. Had to enter closer to the middle of the day. So by that time, the market had already started to move down. So it was a point where I'm just fearful because I'm already basically at the middle of the candle. And entering a sell side position here is not the best thing because you have this amount of risk to assume, and you can't really justify taking that amount of risk if you don't think the market is going to push down. So I didn't have anything about the market there that was telling me that we're going to continue going down. I even had a strong demand zone here, so I didn't believe that we were going to continue going down, but we did. But out of fear, I actually just closed the trade out for a profit of 36.03. So I entered this one at 14,827. No, I closed this one 14,827.94. You can see it's closer to within that demand zone because I was expecting a huge rejection, right? So that was a total profit of 36.03. This other trade now entered the buy side trade. So I saw a reversal from the demand zone. It didn't hold, but it was enough for me to make some profits out of the market today, around 21.96 here. I entered at 14,806.84, and then I actually closed it out at 14,828. 14,828.80. So you see it's closer to the top of that zone, but it wasn't a convicted trade, right? It was just a small reversal buy side trade. Looking at the daily candle, you would have never known that there was any form of reversal, but this is what happens during the day. This is why I'm looking at the daily charts, because if you get a good entry right here on the day, and then you have a stop loss of what, what, $5, $10. You could have had a stop loss of $10 and made upwards of $300 today, just having the right entry. I have a sell side trade here. It's looking like, what is this? This is looking like huge indecision, just like this. Hopefully we don't see some shit like this, but if we see some shit like this, I'm gonna be down about $20 and just call it good for tomorrow because I'm gonna be on the road. So this last trade I entered, and this wasn't actually the last trade because this one actually closed before the buy side trade, but it's just where I got stopped out. So this is actually stock based on where I opened it. I opened it after this trade as like a strangle. In case the market went up, I would have made profit. In case the market went down, I would have made profit. The buy side held up a bit longer, so I was able to let the buy side run a little bit more to clear out the loss from the previous trade. But then I saw that the trade was not about to continue. The weaker side to the trade was to the buy side, so the sell side still prevailed, pushed us down into newer lows. So the sell side was actually hit out first, but the buy side, I had to take that out quickly. So on the sell side trade, I'll show you where I got stopped out at 14,806.4. That's where I got stopped out for a total loss of 15.92. And I noticed I didn't write the entry here. The entry was at 790.48. And that was a total loss of 15.92. I can see that with this trade, I mean, I got stopped out for sure for the amount that I like to kind of get stopped out for. But if I didn't take that stop loss, I would have been able to ride it down another 100 pips. So I could have made $100 on this trade, but the amount of risk I would have had to assume, and then it kind of goes against my confluence of that zone actually holding up and the market reversing from there. So that's what was kind of giving me a biased view of where I'm trading the market. So it just was not a very good setup today. Let's look at tomorrow's trade, because I mean tomorrow's candle has already started, but I already got wicked out. So I had actually a buy side trade, because I'm looking at this like we might get a nice reversal off of this, or we might still get a push down, right? But it's looking more like a reversal to me, similar to this candle, but I'm not sure if it's going to repeat the same way how it repeated the last time. But if we get a reversal, it will be a nice probably trend up, and we could be able to trade that. Just we would have to just be aware of these wicks down. But if we have a nice reversal, you can have a bullish candle after that, bullish again, and we just kind of run it up from there. So I'll be looking for similar opportunities like this when it comes to the other side. But for now, my bias is to the bearish side, and then we're going to let that play out and see how Monday trades after that. We don't have much news coming Monday. No FOMC, no CPI, hopefully no PPI, and I don't think we have any earnings coming up right now, so the market will be able to just trade off of its own. And I don't think we're going to see a lot of doji candles where it's just showing you indecision. I think we're going to have a decisive move, possibly to the buy side, because we're in the demand zone and we haven't been able to break below it. We've only been able to break into it. So hopefully we don't break below it and keep on going down. But if that happens, I'm prepared to trade it to the downside, right? You know that based on the strategy. So that's basically it for today's video. Let's have a look at Tesla stock. You can actually see Tesla is actually having a bearish candle to the downside. We're kind of breaking down. So looks like more bearish pressure in my opinion right now. Tesla should actually be up right now, because if you think about it, all of the big three car manufacturers are completely shut down, while Tesla is continuing to print cars every single day, and they're training their autonomous software, training their supercomputer, training their batteries. They're doing everything full speed ahead, while everyone is kind of getting stopped by all of the how do you say, like that middleman. So you have the unions, which is the UAW. So Tesla not being a union shop, they're not forced by anyone to pay their employees a certain amount. Tesla can pay their employees what is equitable for them. But when it comes to Ford, GM, Stellantis, these companies are actually forced by the UAW because they hire union workers to pay a certain amount. It's funny that all of this was being pushed before, like union workers, union jobs, all of this, and then this turns out to be what ends up, I think, damaging the economy, because these are some of the big GDP contributors, sellers of vehicles that sell just about every day. Those Fords, those GMs, those F-150s, those Silverados, those Chevy Bolts, those GMC, all of that is paused right now. Those Jeeps are paused right now. All of that's going on. So hopefully it doesn't have such a negative effect on the economy, but if it does, I'm prepared to trade it to the downside and make some money off of it, right? But I'll see you in the next video. Hope you enjoyed it. Bye bye.